Hey everybody, here we are again to another edition of the PLN Report. I'm joined here on my left with my partner, Romney Navarro, the co-founder and leader of the PLN and partner at Noble Capital. And to my right, my colleague, Frank Mbolu, the Vice President of Private Lending at Noble Capital. And we're glad to be here again with you to talk shop about private lending. We're going to today break down the PLN report, and we're going to talk a little bit about housing markets. We're going to talk a little bit about the state of private lending, and we're going to talk about the capital markets. So looking forward to spending a little bit of time chopping it up with you guys and getting into it today. And to kick this off, I want to turn it over to Romney. He brought a little something special to make this a little more interesting.
And a little easier to record. Last time we did this, we were at a restaurant and I brought a bottle of bourbon. It was a good bourbon. It was a Willits. Now the week is done and it's time to have a cocktail, so I thought I'd bring something new, and maybe every time we do this we could bring a new whiskey. This one's not a bourbon though. I brought a rye, but this one is a great rye. So I think this one, I actually, a shout out to my guy, John Tedesco at Appraisal Nation. He's the one that turned me onto it. And we had one here recently, so I thought I'd share it with you guys. It's one of my favorite ones now. It's an Angel's Envy finished rye, finished in a Caribbean rum cask. So we're starting with the housing markets. The housing markets, I think everybody who's anywhere in the United States, it's not just Austin, it's not just Texas, anywhere in the United States knows that the housing markets are hot. Jaden is calling it white hot because it's just beyond. And the truth is, it's everywhere we're transacting right now. It's just hotter than we've ever seen before. In fact, we have been seeing less and less inventory for flippers, for people buying rentals to buy. There's just not enough inventory out there. So kind of the new frontier we're all entering off into and really venturing into deeply right now is new construction. Where everybody was once looking for a little property to flip, just kind of turn the inventory, that doesn't exist anymore. Now people are looking for a lot because honestly, the lots are the ones that are creating the most value. So you can go, put up a house, somebody's buying it.
It reminds me, you were talking new construction lending 5 years ago. A lot of institutional partners and, investors were afraid of new construction because they saw inherent risk in the construction process itself. And it's funny because they would think that there was less risk in a rehab or a remodel than new construction. But when we started looking at the data closer, we actually found that new construction's more predictable. You can really break it down into clear stages, and you can understand that risk curve of how value and timeline kind of come together. Not all servicers can service construction lending, from my experience. Since not all servicers can service construction lending, what are you seeing as a response?
A new type of servicer is an opportunity that somebody's capitalizing on. We started to capitalize on this a few years back because we were doing construction lending. We knew how to service construction loans. New construction is, as I mentioned, it's the new frontier in investment real estate. It's because, as I mentioned, there's not an old house that you could rehab anymore. Now you have to actually build a new house. So the question on how do you service this and how are people servicing this and how's that working? It's hard to say because I believe a lot of people are doing it wrong. And it's, right now I think they're going to be given a lot of grace because the market is so strong. The minute the market settles down a little bit, I think you're going to see a lot of people caught off guard and starting to tip over. I know we figured out how to do it. I mean, we've got thousands of these loans under our belt.
Right on. I mean, it's a school of hard knocks for us. That's led to our expertise in servicing. And then the other side of that is underwriting construction loans. We call Frank the gatekeeper, and as the gatekeeper, how are you seeing underwriting work on construction loans when your collateral is different than a rehab or where there's a physical property there to actually underwrite and understand, all the way from valuation to marketing time and just getting into traditional underwriting. This has got to create some intricacies that are different for us in the underwriting process.
Yeah, of course. And to start, it's being able to assess the quality of a loan it's paramount to understand the success. So what we do is we mitigate that by what we call our internal the 5 C's. So the first C being collateral. Collateral is the underlying tangible asset that's secured by the loan. The second is the cash. So that's us understanding the borrower and seeing how much equity, cash in the borrower is bringing. The third is his credentials. So credentials is primarily the experience. So understanding that that borrower is being able to do this project that's relevant and is consistent. The fourth being credit, us being able to understand, okay, what is your payment history? Are we gonna be worried about that down the line? And the last is character, make sure that everything checks out with that borrower gives us that confidence that we'll be able to continue to go through. So looking at those 5 C's, everyone's always kind of wondering, hey, what's the most important? And they're all important, they're all kind of weighted differently, but I have a great example of why collateral is very important, especially right now when we talk about how hot the market is. We had a loan here in Austin at 78702, so towards the east side. That borrower is actually his first deal with the PLN, with Streamline coming in, but the collateral being in East Austin, very hot market, we want to be able to give him that deal because we want to take advantage of that opportunity. This borrower actually checked out in all 5 C's. So the collateral is good, he brought cash to close, the credentials were there, he's done these types of deals, new constructions before, the character and credit all checked out. But what we really liked about this deal was the collateral. We realized like it being in 78702 in Austin, a very hot market, that since we already mitigated risk on the other 5 C's, that right there was the opportunity we wanted to take advantage of.
For our audience, I want to talk a little bit about the types of investors that back us in our private lending business. You know, we work with high net worth investors, and also known as accredited investors. And we also work with institutional investors. You know, we offer them a couple different opportunities to invest. They can come in a fund where it's fully managed, kind of, no hassle. And then also we still sell direct loans, both to institutional and individual investors. And one of the things that they're following closely about us now is, as you guys begin to expand and lend outside of Texas, how are you making those decisions on which markets to go to first and how you're going to actually strategically expand?
We issue the favorability ranking every quarter. And the favorability ranking lists the cities that we like based on a bunch of different criteria: population growth, affordability, inventory, days on market, those types of things. We kind of put all that into like the secret sauce, secret formula, and it issues a favorability ranking. So the long and short is, it looks like we're going west. The favorability ranking, it's no surprise. It starts with Fort Worth, number 1. And then as we move out west, we're getting to Seattle, we're getting to Kansas City, come back east and getting into Atlanta. We've got a lot of deals kind of happening in the Atlanta area now. And then of course we get right back to Austin. So many real estate markets today are short on inventory. And what do you do when you have no inventory? You build houses.
That really says, a lot about you two, to be able to track those type of investors. You've got to be able to put up performance. You've got to be able to prove to them not only that you've done good, kind of rear view, looking back, but you are strategic and you've got vision for where you're heading next. And I think that's what all the investors are looking for right now, kind of as the pandemic is winding down now, post-COVID era. What is the strategy moving forward? Because this is a completely new marketplace and it happened fast.
Long and short, duplicate the things that have worked. I'm not going to try anything new out there. So what's worked for us here is a pretty simple system. I mean, mind you, what's behind the curtains is fairly complex. There's a lot of work and time and energy put into it. But the way that we present it to the borrower, a fairly simple system, and we're just going to continue to do that. And that is, continue to hire wonderful customer service heroes. People who literally bend over backwards to make sure the borrower gets what they need. Continue to be the expert in construction, but not the only expert. And this is what I mean, continue to do what's worked for us. Those vendors that have helped us grow over the last 2 to 20 years, we're going to use them. We're not going to use the other person, so long as they have a national footprint. So What's in it for servicing at the PLN level is more of the same, but relying on the institutions that have footprints that we've transacted with. It almost goes back to the 5 C's. I don't know what the 5 C's of third-party vendors are, but absolutely and without a doubt, credentials and credentials with us is what's going to get us there.
It's phenomenal.
Yeah.
I've got one more question here for you, and then we can cut this section and move on to something else, get back to drinking. But one more question for you guys. How you talked about the digital PLN marketplace that's coming and how you're bringing fintech into the business, the way of the future. And that's going to, again, just make things more efficient and more scalable on the capital side. Anything on the distribution side, on the technology front that you can talk to or speak to?
Absolutely. We're investing more than we ever have. This happened before the launch, the kind of the big uptick, the dialing up of the products. We're investing more than we ever have in technology. And the idea is to kind of open up the pipe a little bit and to make it easier to transact the mothership. It doesn't mean, when I say easier, it doesn't mean it's easier to get a loan. It's just easier to administratively get from point A to point B and do that at scale. So absolutely, technology is a big thing. I think fintech is a word that's kind of often used for anything. So long as there's a little part finance and a little part technology. It's like if you work at a bank with an email address, you're fintech. It's not the case. I think we're going to get a little bit further down the aisle there. A machine's not going to underwrite our loans. That's what I'm saying. How are we going to get there and scale more of the same? You know, humans still going to underwrite our loans, but a machine's going to tell us everything that it found. You know, and it's going to make it a lot easier for the private lending partner to submit the deals and have, say, 70 to 80% of the work done. And you know, again, this is a Q1 conversation, Q1 2021 conversation, but it's definitely going to change the game for us, and it's going to be a very different look than what people have out there, especially because we have such a strong interest and a desire to continue to grow the new construction in a market like this right now where inventory is such a problem.
What are you guys hoping for that's on the horizon here that's going to drop that is going to be big news?
There's some I kind of want to share, some I don't know if to share, but there's definitely going to be an announcement on a large capital partnership. At some point, it's going to happen, something larger than anything we've ever seen. Large nine-figure deals. That one's probably enough, right? That's like pour yourself a drink. But I like it because it's, like I said, there's a handful of things that we do that are so predictable that all we need to do now is focus on the sales and the marketing. The underwriting and the servicing is got kind of its flow going. So that's huge. It's huge for us and it's huge for our capital partners. I would say this is equally as important at the PLN. I'll say at the PLN, I have a handful of, you know, generals, right-hand men and women who run a lot of the day-to-day. And just in recent months, we partnered with one in particular that we've had a relationship for a number of years. But Abi Golhar has joined the PLN, and he's, you know, kind of taken us from good to great over the course of a year, like that. We've taken the relationship to formal, so now he's a PLN partner, and he's, you know, we're growing together. Abi Golhar, if you guys don't know, is an amazing dude. He hosts the Think Realty podcast. Think Realty, if you don't know, is kind of like the Bloomberg, if you will, of real estate investing, and he's the voice and the heart and the soul and frankly the personality. And for us, he's a lot of the brains and the mechanism. So that's a huge announcement.
I think Romney covered it. I think the big thing for me, the call out is on a national level, we'll be there on capital and production. Like the PLN powered by Noble Capital is going to be a national voice to be heard, and everyone's going to understand what we do, understand our strategy, and understand where we're going.
Fellas, this has been great. Another one in the books. Yep. And to all of our investors, thank you. Our capital partners, our growth partners, and all of our strategic relationships, vendors, and so forth. We wouldn't be where we're at without you. Looking forward to bringing you another one of these for Q2, and we'll have more exciting news and strategies and insights to share as we continue on our journey. Thank you guys for tuning in, and until next time, cheers.